Hey, Diana, did you know a law firm can grow revenue every year and still go broke?
Mark, that's the dumbest thing you've ever said.
Ladies and gentlemen, jurists and just curious, welcome to the Successful Barrister podcast. Here you'll learn about marketing, management, and life skills for lawyers that probably won't get you disbarred. Hosted by Marc Whitehead, a seasoned lawyer who remembers when fax machines were cutting edge, and Diana Berry, attorney, COO, and the brains behind the scenes. Together, they are the legal world's most dynamic duo since statutes met regulations. So if you're looking to build a practice, not a prison, you're in the right place. Welcome to the Successful Barrister, where legal legends are made.
And welcome to the Successful Barrister podcast, a podcast for lawyers and law firm leaders about marketing, management, and life skills that probably won't get you disbarred. I am your host, Marc Whitehead, alongside my number one, my COO, Diana Berry. Hey, Diana, what's up?
Not much. How are you doing, Mark?
Oh, I kind of come in today. It's Monday. I got busted knuckles. I spent all weekend working on my jet skis to try to get them rolling for the 4th of July weekend. And I'm like thinking, I did not go to law school for this shit.
How about you? Did you enjoy it though?
No, I did not. I busted my knuckles. I sweated my ass off. I almost fell in the water.
It's
Next
very thinking
year-
you would have outsourced.
I'm outsourcing this.
Yeah.
Totally outsourcing this.
Okay.
I do this about once every 10 years. I think I can do this. I don't have to pay those idiots.
Oh.
And then afterwards, I'm like, yeah, what?
That is why I paid those idiots.
That's why I
Yeah.
paid those idiots.
I'm the idiot. Yeah, pretty sure you. Well,
Right.
right for you. And good for you and your jet skis. I didn't know if that was a subtle way to, get in the fact that you have jet skis. It's coming.
I have a fleet.
Yeah, yep, that's where
I
that.
have 4. So everything I do, I have to do 4 times.
That's true because you have.
I have $4.
Yeah. Yeah. So yeah, as one of 4, I do appreciate the quality there. Yes. And speaking of numbers, today we are talking about accounting, finance. I'm not sure which one or maybe both.
So I think we're talking mostly finance. So I think isn't this the final module on the critical business skills course that we've been talking about off and on over the last 6 months?
Yes, and it is the final module.
So as if for those diehard listeners who listen to every single episode, because I know you're out here, the critical business skills for success is a 36-part lecture series, which I've listened to twice. So 72 lectures I've listened to because it is that good. And there's a section on marketing, a section on management, a section on strategy. And this last section that we're going over, human resources, that was organizational behavior, but I call it HR. And this last section that we're going over is finance, so specifically from our perspective, how finance works within a law firm. Because if you can't see your numbers in real time, you're not running a firm, you're just reacting. So that was the little tricky quote that I wrote from the summary that I have of this course. But it's actually one of the most important things. So we just got back from PILMA, and the keynote speaker at PILMA was Greg Crabtree, who wrote Simple Numbers and the second book, I can't remember which one it was called.
You can tell.
But it's all about how to run the numbers to run a profitable business. And he spoke at PILMA to a bunch of damn contingency fee lawyers. I think the whole concept of a contingency fee firm kind of blew Crabtree's mind because he's so used to working with real businesses that actually do real things and get paid in real time.
Not riverboat gamblers.
Not riverboat gamblers like us.
Yeah.
And they're like, wow, this is how you work.
Yeah. How do you make this profitable?
How do you make this? Yeah, I know. So anyway, so apropos that we're going over finance this week. And of course, now I have to confess, we actually did this episode months ago and we had technical difficulty and our disc, fouled up, snarled, whatever the medium that the episode was recorded on got, what's the word? Debunked.
I'm not sure.
Screwed up. It got screwed up. And we couldn't.
Erased or
It got erased. We couldn't pull it off. We actually sent it out to a company. We so badly did not want to have to do this a second time that we actually sent it out to one of these electronic media specialists to see if he could recover the data, and they just couldn't recover it.
Yes, I very rarely lose my temper with people outside of the leadership team. Leadership team gets the mic.
Yeah, they really do the right.
And at this time, I was not happy, and I made sure people knew that. Not that I don't enjoy reporting the podcast for you lovely listeners. I do enjoy wasting my time. So things happen, but one thing that shouldn't happen is your accounting, and that's what we're going to talk about today, the difference between accounting and finance and the appropriate roles in both in running your law firm.
So one of the basic theses. I like theses.
Honestly, I don't know how many you have, then that would determine which word is correct.
The thesis is finance isn't accounting. Finance is decision making. Accounting is accounting or counting language.
It's reporting. It's the numbers.
It's the numbers. Finance is actually then using the numbers from accounting to make decisions. So, what problem are we trying to solve here when we talk about finance? We're trying to basically look at a whole bunch of numbers, and we're trying to see how to make educated decisions about how to move forward in the future. Accounting is all about the past. Finance is all about the future.
Yep, and I think that most law firms, I dare say, have a very good, basic to good accounting software system, right? Because, most people have a bookkeeper. Well, accounting, I would say, is what you report to the IRS. Like, they're the ones who care. So if you have...
That's GAAP accounting.
Yeah, it is accounting, right? That is not... If you think that you have finance and you're like, this podcast doesn't apply to me, I would say that you just have good to basic accounting systems. You don't really have a method by which to make decisions. And by making decisions, Marc's talking about things like, should I spend more money on marketing? Should I open this new practice area? Do I have the cash to grow? And I think that that's one of the things that we hopefully will talk a lot about today.
And do I have to hire my next case manager? How much do I need to grow before I need a new case manager? How many more cases do I need to bring before I need to hire another lawyer? Yada, yada, yada.
And so accounting's not going to help you with those types of decisions, but finance will.
Yes. So I think the truth is here, you don't have a revenue problem. You have a visibility and control problem, I think is the other pithy little quote that I wrote.
What do you mean by that, Marc?
So a lot of people, this is the thing, this was the Hey Diana. You can have record revenue and still be dead broke. I think there's a statistic out there that, as most of them are made up on the spot, but there is a statistic out there that a large percentage of companies that have gone bankrupt within just a few years of their highest revenue ever. It's because they didn't know how to manage it. That's what they did. This is what happens. Hey, I had a bang up here. Let's grow. Let's hire some more people. Let's go spend some money. And all of a sudden, you're screwed because you didn't account for debt repayment. You didn't account for the tax man. You didn't account for, just, bad luck. Maybe your revenues, just because your revenues are high this year, doesn't mean they're going to stay high next year. So that's what I mean by, it's a visibility and a control issue. It's like, do you know your numbers, but do you understand what your numbers are telling you?
Well, and also I think that revenue does not mean cash flow, or that's completely different in two different statements that you should be evaluating on a very regular basis. And so, Marc, we're going to talk a little bit about what we do at the firm and some of your thoughts on accounting and finance today, right?
Before we all go bankrupt. We'll be right back.
This podcast is sponsored by Marc Whitehead Associates, a national disability benefits law firm. Marc Whitehead runs a firm of over 60 dedicated people whose mission is to make a difference in the lives of our injured and disabled clients. Marc represents disabled claimants in Social Security disability, private disability insurance, and veterans disability claims in all 50 states. Marc Whitehead is double board certified in both Social Security disability law and personal injury trial law. Marc has litigated disability cases in over 40 states and counting, and can help your clients too. Stop throwing your phone calls away. Call Marc Whitehead at 701-VIP-LEAD. That's 701-VIP-LEAD. Or visit our website at disabilitydenials.com. Referral fees are paid in all jurisdictions where it is permitted. Refer us your disability cases today and know that your clients will be in good hands.
And we're back. Part of the core teaching that I wanted to really hone in on about finance is, here's the first one I saw. There's only 5 numbers that really matter. And the quip I wrote down was, if you need a 20-page financial report to understand your business, you don't understand your business. There's only 5 numbers that really, really matter. Want to know what those are?
ID work.
I'm going to make you guess.
Cash.
Damn right. Cash on hand. That's the number one thing. If you don't have cash, you're screwed, basically.
And usually you use that on statement of cash flows.
Yes.
You
So
don't.
that most businesses out there that I have looked at, and I've looked at quite a few law firms out there, do not have a statement of cash flow. They have a P&L and they have a balance sheet, because those are easy, and QuickBooks, you can hit a few buttons and QuickBooks can pump those out for you. But they don't have a statement of cash flows because those are harder. QuickBooks, quite frankly, sucks at that particular report. It just doesn't do it well
For law firms.
for law firms. In our firm, we have to generate it manually. I mean, we get the numbers from different QuickBooks reports, but then we have to manually shove them in a spreadsheet, to make it work. But it is the hardest thing to deal with, is cash on hand.
And I will say, Mark, whenever I got here, you had I'd say a pretty sophisticated financial reporting system. If I'm doing my math correctly, because I'm almost 6 years into this job and you've been practicing for 30 odd years, you went over 25 years without a statement of cash flows, because we just got one.
We just got one.
Yeah.
We
So-
actually had to hire an expert. We hired Daniel
Yeah.
to go help us create a statement of cash flows.
And then now our CPA manages it.
Yeah, and now we have somebody that manages the damn thing, because it is a little bit of a thing. So
What other metrics would you track, Mark?
weekly collected revenue. So how much revenue are you collecting? And when we will want to look at it weekly, and you can't look at it monthly, I suppose. Contingency fee firm might be a little longer time period to look at it. But you want to see the trend line. Where am I trending? So a trend is not one data point. It is multiple data points strung together, and then we see directionally where it's going. Are we creeping up? Are we creeping down? What are we doing? Is it cyclical? If it is cyclical, can you time it to seasons? Like, I look at some of our cash flow numbers, and November, December are always slow. That's seasonally. We just know that November, December are going to be kind of slow for us. So at least I can deal with that if I know it's coming. And then in theory, we bounce back January, February, March. Although it doesn't always happen.
It did not.
Yes, it doesn't always happen. So you need to know how your revenue is trending week over week, month over month. The third number is your pipeline value. What is the value of your work in product? That's what the accountants would call it here, in lawyer land. What is the value of your case inventory? I've got, 100 cases. They're worth X number of dollars. Sometimes what we do is we do an average. So like a Social Security case for us, we value it at a $3,000 inventory batch. So if I have 100 cases, that means I have $300,000 worth of inventory under that formula. But that's your pipeline value. What do you have in the pipeline?
And I think that, Mark, it is something that we talk ad nauseum about on this podcast, but your case value has to incorporate your losses, the ones you're going to drop.
Right. So the way we look at it, I'll do some simple math. I'm hedging slightly just to make the math simpler. But let's say that my average collected fee on a Social Security disability case is $5,000. However, I only collect on 60% of my cases. 40% of my cases are closed without a fee. So I have to multiply 5,000 times 60%, which is my closed fee rate, to get an average inventory value of only 3,000. And this is where people miss. They don't count the zeros. Now, in reality, if we only collected on 60% of our cases, I would be quite sad. But it is a number. So you got to know what that number is. You don't win every case. A lot of cases you drop because you determined they aren't good enough. A lot of cases your client wants to drop. Some cases you just can't win as much as you try. So there's lots of reasons that cases fall out. You have to really be smart about this in the mass tort world, because in the mass tort world, there's going to be a big drop off. I mean, rarely do you collect on 50% of your cases in the mass tort world. It's usually a lot lower than 50%. So when you're factoring in, but you're doing that kind of math, you really have to think about dropout rate.
And I think that you keep talking about and talking around this, but I just think it's so important because you're not, and with us, it's really easy, right? We have 3 different departments and 3 different disability claims, but
We got to have lots of numbers. So we have a lot of large numbers that help us smooth the number down.
For personal injury firms or even estate planning, well, let's not get into the flat fee world yet, but the personal injury world, you could be thinking, okay, well, how do I do this for me? And I think that's still, you can still do, I think you problem soft tissue cases person as your premises liability versus your other types of torts.
Right. I mean, you can put an inventory value on every case. And understanding your inventory value doesn't have to stay the same. You can initially put a value of it at 50,000, and then if good facts come out, you can up your value. If bad facts come out, you can lower the value. You kind of have to do it more on a case by case basis, or at least case segment by case segment basis. But it can still be done. I've seen lots of demonstrations where this is done. And quite frankly, the upside of the PI world is if you're conservative with your numbers, 1 out of every 100 cases is going to be a multi-million-dollar case. I think that's the statistics I heard.
Wow.
About 1 out of 100 turns into something big. So that's just gravy. That means you always want to shoot low in your revenue projections. It's not.
What's your 4th number, Mark, that you track?
Cost for case acquisition. How much does a case cost you? So if my average inventory value on a case is $3,000, how much am I willing to pay for that case? Well, if I want to make a 6-to-1 return on my investment, which is a good number, 5 to 6 is typical of what you would like to see. That means I can only pay maybe $400 or $500 for a case. So you have to know that up front. What am I willing to pay for a case, given what I'm likely to make from that case? So you need to know your cost per case. The final one is your profit margin. How much profit are you making on a case? Again, Social Security case. Let's say I have to pay $500 to acquire it. Now I'm down to $2,500. How much labor do I have to put into that case to turn it? If I'm putting $2,000 worth of labor in it, now all of a sudden I'm not really making any money at all. I'm making $500 a case. So I need to look at my profit margin and how can I improve my profit margin? How can I reduce my labor costs?
And then I would just say that you said both things, Mark, that I was going to make sure we talked about, is that your profit margin is not just reimbursable case costs. There's all those indirect costs that you just had to pay to develop the case. Something as basic as your case management software, right?
Yeah.
And some people are charging AI back to their clients, but some people are not. Yeah. Now, depending on your bar goals. And so when you think about your profit margin, we're not just talking about what appears on your closing statement. We're talking about all your earned profit margin.
Right. Number 2 on our list. So we went, number 1 was the only 5 numbers that actually matter. Number 2 on the list is understanding the difference between accounting and financial control. Your CPA tells you what happened. Financial controls tell you what to do next. I think we alluded to that in segment 1. Your accountant keeps the score. Your financial controls or your financial advisor tells you what to do with those numbers, how to make decisions in the future based on results in the past. Like bookkeeping. So bookkeeping, accounting, that's recording history. Finance is making future decisions. Most firms outsource their awareness. Most firms really are not paying attention to the financial controls. Now, I will say lately, fractional CFOs, fractional chief financial officers, have become sort of the rage, and I know a lot of people are starting to hire fractional CFOs. We've hired a fractional CFO. We'll see how that works out. So it has been sort of like the hire du jour. 5 years ago, everybody wanted a COO. Everybody wants a fractional CFO. So people are starting to catch on a little bit that knowing what to do with your numbers is starting to be important.
And I don't think that our accountant or our fractional CFO listens to this one. So I'm just going to say, if you think that you can't afford a fractional CFO, and many people can't, you're just a smaller shop, definitely utilize a paid version of an AI tool. Dump your financials in there and ask it to analyze it. And it's been my pet project for the last couple of months that Mark and I are trying to get on the same page about. But there are ways to get this insight now without using a fractional CFO.
Yeah, let Claude be your friend.
Yes. We've used it the last couple of months to great insights.
Yeah, and I could actually we'll look at your stuff and give you some heads up. Now you need to have your books set up correctly.
Yeah.
If your books are not set up correctly, junk in, junk out. But
yeah.
So the third thing is the great courses we're talking about. The weekly finance meeting. What gets reviewed weekly gets fixed. What gets reviewed quarterly gets explained away. I could not agree with this more. I have seen this happen in our firm. I've seen it happen in other firms. This is why we now have a weekly finance meeting. And you could tell Craig's story if you want.
No, gosh, no.
But, you know, the point of the weekly finance meeting is to make sure that you stay on top of everything. You need to look at your receipts weekly to make sure nothing's missing. You need to look to make sure your trust account is reconciled on a weekly basis. You know, you need to release checks, in other words, approve expenses. So every week they show me everything, all the bills that have come due that are in the payables folder. Mark, do you want to drop these this week or not? You know, sometimes it's because I have questions. I don't want to drop a bill because I'm like, bill doesn't look right to me. I think we need to check this out a little further. Sometimes it's because the cash is slight and we just need to hold on to that bill for another week or two. You know, but it helps you look for and flag anomalies if you're looking at it on a weekly basis. And therefore, if you catch something, you only got to go back and look at 1 week's worth of data. You can find it pretty quickly.
Yep. And so we do, of course, being an EOS shop, we do a finance level 10. So it follows its own inherent level 10 structure. The most important thing that I think you're talking about, Mark, is the scorecard. And in true EOS fashion, it's red or green. Every number has a goal, and whether you need it that week is red or green. So it's not just, for example, I think the simplest number is the actual QuickBooks balance of all of the accounts.
Right.
And it has other things. They're more specific to our department. For example, I know we talked about our revenue, our weekly collection revenue. That actually makes our other sport card, our departmental sport card, because then it helps ops understand how they're doing each week as well.
So one of my pet peeves that I require weekly, and this is not standard. Most accountants say, reconcile your bank accounts monthly. I require my bank accounts to be reconciled every Monday morning. So if there's something off, there's only 1 week's worth of data to look at. So we catch things very quickly when something is off. And sometimes you catch fraud. I mean, how many dummied up checks have come through our bank account this year that we've caught?
Yes, and I completely agree. And things like positive pay help that. If you don't have positive pay, I think every bank should offer that at this point. You should definitely pay for whatever. I would pay whatever you need to make sure that is a service.
Explain what that means, because even I don't really. I know the purpose, but I'm not sure I know how it works.
So positive pay is a report that our office manager, our bookkeeper, our ARAP person in the firm receives every morning, and she has to approve the checks that are going to get cash that day, or that were written and that are attempting to get cashed, so that you can know. This happened when you were in Italy, and it was this was not one of those things, if you are a repeat listener, that I troubled Mark with during his vacation. He found out about it later because we caught the fraudulent check. It was actually a really good team effort. So our human caught it. Like, hey, when they got in the morning, they're like, hey, when we downloaded into QuickBooks that morning, they checked and they're like, this doesn't look right.
How big of a check was it?
$6,000.
So somebody trying to rip us off, they dumb it up at $6,000.
They always washed a check, yeah. So, they get they're so good at fraudulent. They're so good at it now, they'll take one of your checks and literally wash it to where they can add in their own name, and just try to make it look like it's an actual check. And so, first our viewman caught it, and then secondly, our positive pay report caught it, and we were able to say, yeah, do not cash this check, or this is a fraudulent check. And so,
It happens a lot.
it happens more, unfortunately, than you would want it to.
I would say it's probably happened at least 5 or 6 times in the last couple of years. And they're not small checks. They're big checks, $6,000, $8,000 checks. People are going for the gusto here. You got to give them credit. They're not candy with it.
No, they're not trying to get by.
Yeah.
They're if they're going to get by, they're going to get by with a big amount. So I do think that there are definitely weekly things that we track on a level 10 scorecard to ensure that the appropriate information is reaching Marc's attention.
Number 4 here, the silent profit killers. So law firms don't lose money in big decisions. They lose it in small ones they never revisit. I can't tell you how many times I have looked at our P&L and we get dinged $57.19 a month for something, and I feel like we have no idea what it is.
Mm-hmm.
No idea what it is. And usually people can explain it like, oh, okay. But then every now and again, I will look at one and like, what? Nobody can figure out what it is. And sometimes it's been fraud. I had that happen on my personal bank account. I got dinged probably 20 times for some time. Those are the smart ones because they got away with it. I got for right under $50. It was like $47.38. It was always a little, but it was right under $50, and nobody caught it, until 3 months later. And all of a sudden, now I'm down $3,000, which the bank did give me back. I was thankful for them because I'm not sure they really should have because I did catch it. But it could be just things that you're not using. We've had subscriptions to software packages that we kept paying that we didn't even use anymore, that we have caught. So, instead by 1,000 cuts, you got to be, looking at the small stuff.
You did my first time maybe last year, zero-based budgeting, where we looked through every single expense item.
It was painful.
It was so painful because you had to do it in different departments for every line item, and it was but we were able to save some money, cancel some things.
Yeah. The other was untracked case costs. We had that. We had to go through that process, and we had a bunch of untracked case costs. Now, ultimately, I don't think we lost any money. We owed those expenses, but what was happening is I wasn't getting the tax deduction for those expenses.
So what would you buy the tax deduction for those expenses?
Well, so when we write off a case, when we close a case with no fee, it's at that point, and only at that point, can you write off the expenses and deduct it. You can't do that ahead of time. That's a whole other podcast about case costs and case cost deductibility and so forth. But they're not deductible in real time. They're only deductible at the point that they become a write-off. In other words, they become uncollectible at the point you shut the case down with no fee, in essence. That's the first time you can actually write off. And we had case costs that have been out there outstanding for years that were just still hanging out there until we audited the books and found it. So basically, I found thousands and thousands of dollars of deductions because we'd already paid the money. It wasn't like we had paid money. I just hasn't written them off yet.
What are some other profit killers, Marc?
Payroll creep, especially overtime. I know we looked at this, and in our departments, you'll see just an hour or two of overtime just here and there. But then if you add it up amongst all the departments, all of a sudden we're getting clipped 20, 30 hours a week in overtime. That's really, really expensive labor. Time and a half is really, really expensive, and it just eats at your budget.
Yep, and that is, I mean, and not just budget, but actual cash too.
Yeah, that's
I mean, that's
cash.
unexpected. You're expecting payroll to be X amount, and then based on overtime, you're now at Y amount, which is not.
Yeah,
Um,
very, very unexpected. So
I think that also when you talk about payroll creep, Mark, I think that's one of those things about growth that people don't necessarily count on, right? You know, okay, well, now I'm going to grow, so I'm going to spend all this marketing money, but then you forget to forecast how much more labor you're going to need. And that's the finance decision.
and this is where people get a cash flow problem.
Yes, because I mean, well, especially for contingency firms, you haven't recouped that, or you haven't made that.
You're waiting 2 years to get paid.
Exactly. But meanwhile, you've obviously paid the increased marketing costs, which is cash. You've already paid your people you may have not counted on. That's cash out the door.
Yeah. So number 5, last on our list here, is growth without control. Growth really feels good. Feels really good to get bigger every year. Until it exposes everything that you don't have under control. So is revenue growth, it can mask problems. Like the expense problem. Oh, well, that's no big deal. Well, you know, the expenses are growing, but, you know, we have the revenue to cover it. Well, what it's doing is masking your out of control expenses that you're not tracking properly. Like you're letting the overtime slide. You're letting the unused subscriptions go by without looking at them. You're just letting it slide because, well, we got a lot of revenue. I suck at this because I do that. When I look and see us have a really good month, I start to take a breath and ease out.
Yes, you.
This last month, June, really good month. Made a lot of money in June. Yeah, I think I'm going to go to Italy. Yeah. So
Again.
Go
to Italy again.
I'm going to Italy again.
I was really hoping you hadn't noticed how well June did. But, you know, I will say we did very well in June, well enough to have met budget for year, or we will have met budget by end of year or by end of June. But
we're pacing correctly.
we are pacing correctly, which was, you forecasted growth for us this year, but we look at revenue weekly, as you know, because that's one of those 5 things that you look at weekly. And we were tracking to be a little behind.
We were behind schedule.
And we had this money stuck in collections. I know
was freaking out.
I wasn't freaking out, but I was trying to really. No.
You were coming up with this.
I know exactly where we were behind, though.
Whoa, yeah.
And everybody that could influence that particular department knew exactly why.
You lit them up. That's what you did.
Well, and you're welcome, because guess what? You can go to Italy again because we are. But we were tracking behind on collections, and so I emailed your senior paralegal yesterday. You didn't know this, or last week. And I was like, hi. It was one of those highs with a bunch of eyes. And I was like, hi, I know you're doing everything you can to get this money in, but any chance we can get this particular check cleared and operating before end of month, I'd really like to have that one. She's like, I'm doing what I can. And I said, thank you. Exclamation point, exclamation point. And guess what? It cleared that day.
There you go. Just a little
You know,
pressure.
well, and awareness. And I think that that's what we're talking about here, you know, not just, you know, if you gotten to that today, it would have been too late because we're reporting this 2 days before the month end. You need someone who's always looking at the numbers to make sure that you could influence what you can.
So here's kind of I think the crux here is growing without control, bad. Obviously very bad. What you want to do is grow in a thoughtful, structured way. Because if you're scaling, I realize the word scaling, that's another one of the is your words. I'm scaling my firm. Do you really know what that
With
is?
synergy.
Synergy. We're all aligned. Like, Jesus.
Nobody knows what you're
Nobody
doing.
knows
You
what
don't
you're
know what
doing.
you're
You
doing.
know what you're doing. If you're scaling chaos, you just get more chaos. Okay? Stop scaling chaos. You want to scale workable, well thought out processes and systems. That's what you want to scale, because that means your business, as it grows, is becoming more and more profitable. If you scale chaos, you're just basically eventually going to run into a big cash flow crunch, and boom, there you go. It's all over.
And I think that that's kind of the crux of that argument is that growth, we talk a lot about flywheel here, Mark, and, growth can be its own flywheel, right? And it feels a little out of control because you put so much momentum behind it that at some point, the very essence of a flywheel is that it creates its own momentum. But I think that when it comes to accounting and finance, those are the parts that you must have absolute control and visibility into, which is, create your own cadence of reporting and which brings visibility to universe.
Yeah. So I think the quote here is predictable, controlled growth, not bigger chaos is the goal. So when we come back, we're going to wrap this up by giving you our 5 tips going forward.
This is Marc Whitehead, lawyer, entrepreneur, and business coach. Thanks for listening to the Successful Barrister podcast. If we've stirred your juices, hit me up with an email at marc@marcwhitehead.com. Remember, Marc is spelled with a C. And get on the Successful Barrister newsletter mailing list. Even better, let's set up a call. I'd love to talk to you about working together, talk shop, or just shooting the breeze.
Okay, and we're back. So I like this quote from the Critical Business Skills course, which I'm going to plug in. Go to, it's not Blundrum anymore. It's called The Great Courses. Thank you. Go to thegreatcourses.com, download the app, get the subscription, all kind of great courses on there, including the Critical Business Skills for Success. So the quote I really like that I wrote down is, you don't rise to the level of your revenue, you fall to the level of your financial systems. And your financial systems are everything, including all your accounting systems, your bookkeeping systems, your decision-making process, anything that's your quote-unquote fractional CFO, if you got one, is having you do. You're going to fall to the level of that core competency. So make it a good one.
All right, Mark, what's your first takeaway from today's episode?
So the first one I have is break down your revenue by practice area. So what you were just talking about earlier is that we had one particular practice area that was lagging behind the other, that was not pulling its weight. But at least we had the revenue broken down enough to know that we knew where we were falling short. Therefore, we could take action. You could crack the whip and you could go do what you did. And I won't repeat it because we probably could get arrested over it, but
It wasn't that bad, but
well, yeah, they got the message real hard.
well, you're
So-
welcome again.
So, but we wouldn't have known to do that if we didn't track our revenue by source, by case type, by practice area. We knew which practice area was falling off, and we knew that there wasn't really a good reason for it. I mean, it was just, we just weren't being as productive as we should have been. So that's my first action step going forward.
And my second one would be to make sure you're tracking your cash timing, not just expected cash. So we do 2 things here that I think that make the most sense for most law firms. One is your weekly collected revenue. Track that on what I call our big level 10 scorecard, our leadership level 10 scorecard, because I think it is also very rewarding for the ops team to see how each of their team is doing year to date and weekly to date. But then also for our lit settlements, we also track what I call DSO, collections, days sales outstanding. That's a throwback to my oil and gas days. But basically, how long are you waiting to collect your money? Attorneys are so great. And they're like, oh, I settled the case. Yay. And they walk away from it. And they're
4 months later, we still got paid.
And that is not what you want to do. You want someone, and that's why that's also on our big level 10 scorecard. It's like how many. We have a KPI called 21 days, how many every days you have for your firm. Make sure that you're tracking how long it's taking for you to get the money in. We actually had a mastermind. We were in a mastermind, a Pelham mastermind. And one of the law firms that we were in he actually started to deduct the bonus to the attorney based on the number of days it took to collect the settlement.
Right.
We don't do that here. it is something to consider for UPI, of course, especially your bigger shops. He was out of Vegas, I believe. And so he had that large settlements and it matters. So as long as you have a metric to it, and if you want to use that as a punitive, then consider that.
Number 3 on our list, it is calculate cost per case by type. So what is my cost per case for an SSD case? What is my cost per case for a VA case? What is my cost per case for an LTD or an insurance case? What is your cost per case by type, by practice area? What it does, it allows you to basically organize your finances, particularly your marketing budget, around that. I know my average cost per case for SSD is $500 a case. All right, if I want to sign up 250 cases over this next year, how much am I going to have to spend on marketing to get those 250 cases? And so forth and so forth by practice type. Now, of course, these are not perfect numbers. It's a whole marketing podcast to talk about, different marketing channels, give you different cost per case. But ultimately, you probably have a blended cost per case. You look at all of your marketing channels together, you come up with a typical average cost per case. And then you know which marketing channels are pulling the weight, which ones aren't, if you know that. So it's another decision point that you can make. What marketing should we really all out on and put all our money into? Which one should we cut?
And so for my fourth action step or takeaway going forward for this podcast, Marc, is to make sure you run a weekly finance meeting. Marc alluded to a story from one of our ADA cousins whose COO missed a monthly financial meeting. And unfortunately for this ADA cousin, he had nearly $1 million fraudulently embezzled from him. And it wasn't obviously, it wasn't because she missed the meeting, his COO, that all this happened, but because the meeting didn't happen, the fraud went on longer.
Right.
Caught soon enough. It wasn't caught soon enough. And so we make sure that we have our weekly financial meetings. And then even if we don't have the finance level 10, because for example, we're just not all here, certain reports are still produced with the expectation that someone is going to review them. And so we, of course, follow the EOS framework. If you're not an EOS shop, I still encourage the use of the scorecard here's where we should be. This is our goal column. And then, of course, everything that's not meeting that goal is in red. Everything that does is in green. Very simple, color-coded way to make sure that you're on track.
Number 5 on the list, identify your most profitable case type. And that doesn't mean it's the highest revenue producing case type or the highest revenue per case type, because the work you have to put into it may be different. It may eat up all your profit. I used to think that insurance was our most profitable case type, and it still may be, but SSD is much more profitable than it used to be because we basically had a fee cap raise. Plus we did a few other things to make ourselves.
I was just going to say, it's not just that.
It's not just that, but it was.
We have an outstanding team, and we were prepared to take advantage of that when that happened.
So we did multiple things to make it more profitable. Now, they're, I don't know if they're neck and neck, but the point is what that tells you, what that tells you is how to spend your marketing dollars. You want to spend the bulk of your marketing dollars on the things that are the most profitable. You want to max that out before you move on, to the second most profitable thing, and max that out before you move out to the third most profitable thing. That's how you want to view it. So if you don't know what is the most profitable thing you do, you don't really know what to market for.
Well, I think that again, we get so many stories, guys, from our ADA cousins, but this one definitely hit home for me and Marc, because I guess I need to start saying 6 years, because we're almost to 6 years, but 5 3/4 doesn't make sense. But in our 6 years together, Marc and I probably had this conversation about 3 years ago. It was like, you need to go back and actually make sure that your insurance section is making money. So not just because you think you have your most profitable case, I'd be like, oh yeah, I already know that one, Mark. Don't worry about it. You're preaching to the choir here. Go back and reevaluate your assumptions and actually make sure that what you think is happening is actually happening. Again, going back to our attic cousin Craig, he thought that, and what is the story he tells? He thought that obviously car wrecks were going to be his most profitable one. He went back and looked at premises liability at that time.
Yeah.
At that time in Florida.
Yeah, Florida's no screwed that up pretty good. So got those. I think picking up bubble gum on the side of the street probably is probably more profitable.
Well, we TBD, I guess, for Florida how that's playing out, but out that time, premises liability actually ended up being his most profitable case type. Yeah. So I'd make sure that you're going back and evaluating what you think is true.
All right. So that's our key takeaways here. Finance is not accounting. Finance is not your CPA. Finance is not your bookkeeper. Finance is you making decisions with real numbers in real time. So know your numbers and then make some intelligent decisions based on your numbers.
Yep.
Any other thing you want to add before we take off?
Yep.
No.
Yeah, I've enjoyed the great courses, Mark. I'm not going to go back and listen to all 36.
I'm going to go find some more great courses, and we're going to cover those.
Great. Let's do it.
They have one on watercolor. Want to do one on watercolor?
Oh.
That makes for a good podcast.
Okay. Yeah. We can get scraping in the bottom of the barrel on that one. We're going to apply that one to law firms.
Okay. Anyway, with that, we got to get out of here. So I want to thank everybody for listening to the Successful Barrister podcast, where legal legends are made. I'm Mark.
And I'm Diana.
And together we're the dynamic duo of law. So if you like this podcast, remember to rate us and review us wherever you get your podcast. And be sure to hit that forward button and send this episode and all other episodes on to any of your friends who may need a little inspiration. Be sure to visit us at successfulbarrister.com for more information and episodes. And be sure to hit us up with an email if you want to reach us directly. Mine is mark@markwhitehead.com. Mark is spelled with a C. And yours is?
Diana@markwhitehead.com, so with one N.
One N. Okay. I did. Mark, does it end in markwhitehead.com?
Yes, sir.
Okay, good. And we want to thank our sponsor, Marc Whitehead Associates, a national disability law firm, which can be found at www.disabilitydenials.com. So, until next time, build a practice, not a prison. Bye.
Bye.